But shifting focus from copper to palm oil then, although palm oil prices have largely remained range bound over the last few years. In fact, over the last few trading sessions, over the last 1 month, it's absolutely flat. On a year-to-date basis, though, it has risen nearly 2%. But what's the outlook going forward? How is demand shaping up? To discuss this, we are now joined by Mr. Sandeep Bhan, CEO at SD Group International Trading, now joining us. Mr. Bhan, thank you so much for taking your time out and joining us here today. What do you see as far as the palm oil prices are concerned? They've largely remained range bound over the last few months, but do you see upside going forward, and how is the demand shaping up in the domestic market?
Thanks for having me. The demand side in India has been buying in a big way. In the beginning of this year, January to April, they had bought very less volumes, mainly because palm was at a premium to soybean oil. And India's demand, which was on an average 700 to 800,000 tons a month, it got down to 300 to 400,000 tons a month shipment. And because of which India had a huge gap of this palm oil. Post this, a month back, the palm oil prices dropped sharply against soybean oil, which is now close to $100 discount. India came back into the markets, and after India revised the duty differential between crude palm oil and refined oil, the demand for crude palm oil increased sharply. And in fact, India has been buying now close to 800 to 900,000 tons of palm oil every month. It started with the month of June, and we are expecting very big shipments in the month of July also. That gave a big boost to the prices here. Prices which were earlier close to 4,000 range on the futures market here, 4,000 ringgits on the futures market, which is now trading at its first key resistance level of 4,200. It hasn't touched 4,200, but quite close to 4,200 today, which is its first resistance level.
Understood. So that's as far as palm oil prices are concerned. But if you can tell us, what is the differential between palm oil prices and soybean prices, and how is that impacting demand for palm oil, especially for countries like India, which is a price-sensitive market?
India, like you rightly said, India being a very price-sensitive market, when palm oil was trading premium to soybean oil by over $100, India switched completely to soybean oil. Now, palm oil is trading at a discount of $100 to soybean oil. The demand which we lost in the initial couple of months of the 2025 year, that demand has switched back to palm oil now, mainly because palm is now the cheapest oil.
Understood. So that's as far as differential between palm oil and soybean oil is concerned. But since you also spoke about imports into India, how do you assess the trend going forward? For the next 2 to 3 months, do you expect import of palm oil to rise on account of increasing demand? And that was led by the widening gap between palm oil prices and soybean prices?
If palm maintains this gap of $100 with soybean oil, then we are definitely going to see 800 to 900,000 tons of shipment of crude palm oil to India for next couple of months. We have festival period coming from India, which is being looked at by the markets here, that Indian demand will continue to grow.
Okay, and how do you assess government's intervention? And you just mentioned about the fact that Indian government also went ahead and reduced customs duty on edible oil. How do you assess the move, and do you think government did this only for self-sufficiency and to ensure prices are contained in the domestic market? And what impact will this then have on imports into India?
See, when government announced this, they actually didn't reduce the duty. What they did is they brought a differential of 20% between crude palm oil and refined olein. Previously, it was 40% olein coming to India and 60% crude palm oil. But Indian industry's demand was that this differential should be increased so that refined olein exports to India is stopped and it is replaced with crude palm oil. Now that differential makes it possible. Refined olein is virtually out of Indian market and crude palm oil has replaced it. Because of crude palm oil is high in demand locally in India also and in origin also, like Malaysia, Indonesia. In Malaysia, Indonesia, we need crude palm oil for our own refineries to run here. And same time, we need to supply to India also. That is making demand for crude palm oil very huge.
Okay, so that's
which
as far
in turn
as
has an impact on prices.
Okay, so that's as far as impact on prices and demand back home in India is concerned. Mr. Bhan, thank you so much for taking your time out and joining us here on ET Now and helping us understand where palm oil prices are headed from the current level.